So something struck me about a video I recently saw from Richard Fain. He was talking about Michael Burry's $1.6 billion bet against the stock market. But Richard said something about the media that really hit me, about their interest lying with the 1% and making the 1% richer. Right, so looky here. So if you don't know Richard Fain, he's a financial YouTuber. Pretty cool, sort of like daily pep talks about building wealth.
Back to Michael Burry. He's betting against the market, man. And specifically, he's betting against the S&P 500, which is the top 500 companies in America. And he's betting against the tech industry. So SPY is an S&P 500 ETF, and QQQ is a fast-growing technology ETF. Those are the two he's making that $1.6 billion bet against. Now, again, that's media information. I have not went in and looked at any of the SEC filings or anything like that, because if you're managing over $100 million in investments, you got to file certain paperwork with the SEC when it comes to what are your investments. Now, I haven't looked at that. I'm just giving you straight off of what I get from the media. And of course, you guys know the media is run by the 1%, so they will manipulate us or try to manipulate us through the media so that they can continue to be wealthy and we can continue to be broke and poor. So take it for what it's worth.
Yeah, so that really hits the spot. So I looked into it, and it turns out that in Michael Burry's filings, it shows that the majority of his clients appear to be betting against the stock market. Yes. So in detail, when the media looked into Michael Burry's filings that Richard talked about, they found two put options. This means that he's betting on something going down. Those two things are SPY and QQQ. SPY is an ETF that represents the entire of the S&P 500, right? The most biggest, largest companies in America. QQQ is similar but represents the tech sector. The filings showed 2 million shares of each of them, which looked like 90% or more of Michael Burry's portfolio. So they interpreted it as Michael Burry putting all of his portfolio, all of his money against the stock market. The media here is mixing up notional value and actual value. The actual value is the amount of money that Michael Burry paid for his options contract. The notional value is the would-be value of all the stocks in that contract. So Michael Burry actually paid, like, let's say, a couple of $1 million for that contract. So it's like an insurance against the stock market going down. Definitely not going all in on a $1.6 billion bet against the stock market and it going down. All of this can get confusing, right? This option stuff can get confusing for the average person, which is why the media spins it like this. Or perhaps that's not the only reason why. As Richard points out, the media really has the best interests of the 1% really at heart. And telling everyone that Michael Burry made this bet is very dangerous. They could trigger a sell-off in that all the little folks sell their paper assets out of fear, and the 1% are there to just buy it all up at a discount. So what do you think? Comment below and give me your thoughts. And hit that subscribe button so I can catch up with you in my next video. I'm Code Monkey Mike, software guy who loves to talk about financial topics. Thanks for watching.